Hello everyone. Hello guys. Thank you all for joining us for this week's live stream. As usually, we're gonna go through the economic calendar. First of all, my name is Antreas Themistokleous. I'm a trading content specialist with Exness. So our usual agenda. We're gonna go through the economic calendar for this week. What's happening in the markets. We're gonna go through some charts, some data. Feel free to post your questions in the chat as we go along, and I will try to answer everything to the best of my ability, right? Before we begin, please let me know where you guys watch us from. Post the flag or write it in the chat. We have here Mr. Eric from Ghana. Hello, Eric. Thanks for joining us. Okay, let's give a couple of minutes for more people to join, and then we can start. Joyce, hello, Joyce from Kenya. Joyce is a regular, I believe. Hello, Joyce. Yes. Okay. All right. So let me know, guys, if you can hear me and see me. Okay, so we can start. Sometimes we have some issues with technical issues, let's say. All right. So if all is good, we can begin, I think. Yes. All right. Now, so what I wanted to show you guys is the improved economic calendar that we have at Exness. If you go to your platform, your Exness platform, and click on your personal area here at the top right, is a little 9-dot box, and you can see this screen, and you can click on economic calendar and see all the important news. You can filter out here if you want to see low impact or medium impact. I like to just check the high impact to avoid too much noise or irrelevant or not important pieces of data. Stefano Kellerman. Yes, hello to him. All right. So you can click to filter the impact that you want to see. You can filter economic events or holiday events, and you can select which country do you want to check data from. You can select one, you can select them all. That's what I have here, all countries. And you can see a list of what data we have. So today we have these pieces of data. The ones that are kind of grayed out is data that we have already the official figures, official release, right? And the ones you see here with the dash, we still have pending data coming up. All right. You can also select to see when the data are coming out. We had the pre-selection is for today. Let's check on this week, right, to see what's coming up in the following days. Yesterday we had some data from China, inflation rate and producers price index, some industrial production from Germany. So you can see what happened, what pieces of data were released. All right, so moving forward, we have the tomorrow we have Japanese producers price index, which is expected to remain stable, 2.3%. No big surprises there. The important data for this week, I would say, is the US inflation rate that is coming up tomorrow, where the yearly date is expected to remain static at 2.4%. Month over month is expected to slightly increase by 0.1%. That's for the month of February. That's the monthly data. And core inflation, the yearly figure is expected to remain the same at 2.5%, and the month over month to decline by 0.1%. Nothing too extreme here. No big shifts are expected on the inflation reading from the United States for February. But what is important is to be aware around the publication time if we have any significant deviation or significant surprise on the actual figure compared to the consensus or to the forecast. For example, if we have here an expectation of 2.4%, but we get an actual release of 3% or higher, which is probably somewhat unlikely, right? Then that will for sure create volatility on the dollar pairs, right? Same goes if we have, let's say, an inflation rate of 1%, highly unlikely, but if we get that, then we might see volatility spiking around publication time. So you get what I mean. I mean, when we have significant deviation for important pieces of data, like the US inflation rate, then volatility spikes. All right. Now, what else do we have on Thursday? Balance of trade from Canada. Okay. Important, yes, not that much market moving. Initial jobless claims, okay, weekly data. Balance of trade from the US, somewhat important, but it's for the month of January, right? So probabilities are that it's already been priced in, and on just 5 billion in trade deficit difference from the previous. So again, not big significant change there. Okay, moving on to Friday, we have the British balance of trade, which is expected to worsen, to go from 4.34 trade deficit to 6 billion. So that's somewhat bearish news for from the pound. GDP is not expected to have any significant change, 0.1%. Again, this is for the month of January, so priced in probably. But again, in the same goes as with the US inflation. If we do have a significant change from the forecasted figure to the actual, then again probability will spike. Industrial production in the European area, not that significant. I mean, the European Union is not a manufacturing giant per se, right? So industrial production figures are not that influential on the market. Unemployment from Canada is expected to go from 6.5 to 6.7, slight increase. Somewhat bearish for Canadian loonie if confirmed, right? So we'll see what happens on Friday. And we also have the US core PCE index for January is expected to remain static at 3%, the yearly figure, and slight decrease on the monthly figure for core PCE, and then for the PCE index, slight decline by 0.1% on the yearly figure, and same goes for sorry, that's personal spending. We don't have monthly for PCE, but that's okay. We have the yearly, and lastly we have the US GDP growth rate, which is expected to decline by 3 whole percentage point, going from 4.4 to 1.4. This is the second estimate. That means that we already had the initial figure, the initial expectation. This is the second estimate, and we're gonna get another one, which is gonna be the final. The final figure, but by the time that we reach the final, we already have two readings. So more or less, this has already been priced in. This is for Q4 of 2025. So we are already approaching the end of Q1 of 2026. So this piece of data might not be that might not have that much influence on the US dollar. All right. Now that's it on the economic calendar. In terms of earnings for this week, nothing too major. We have Oracle today and Adobe on Thursday. Both big companies. If you are trading those two individual stocks, just keep an eye out on Tuesday and Thursday. All right, now let's proceed with the charts and see if we can find any interesting setups. Personally, I did find a couple that I want to share. Before we go through, please let me know, guys, as we go along, if you want any individual instrument analyzed or whatever it might be, forex or crypto or commodities, whatever you want. All right, we're gonna go through what I have here. But if there is something that's that you monitor and I didn't go through, please write it in the chat and we can go through it together. Now, before we proceed, I want to stress that this is not an investment advice, right? This is not a recommendation of any kind by Exness or the company as a whole. No, this is just my personal opinions. This is a demo account, right? This is not a real account. I'm gonna explain what this small profit is here. This is a demo account. This is for educational purposes only, right? So anything I say, anything I choose to do, right, on the demo account with no real money, right? It's just my personal opinion, and this is not an investment advice or a recommendation by Exness. All right, now that we got that out of the way, let's go through our charts and see what's happening this week on the markets. Obviously, I know that many of you might want some explanations on crude oil. We all see what's happening around the world right now with geopolitical tensions around the world, especially the Middle East with the US, Israel, and Iran war, right? So the interesting thing is that we all just expected crude oil to continue pumping, right? Some of you might started trading crude oil and got either stopped or got a margin call or something yesterday, right? So why didn't oil just continue pumping all the way to the upside until the war is done? First of all, the market tends to be somewhat proactive, right? So the area of correction, right? The price of crude oil reached over $112, $113 yesterday, which on the technical perspective is exactly on the 78.6% of the monthly Fibonacci retracement level. These levels go way back to July of 2023, right? So this is the monthly Fibonacci retracement level, and the last time that we had this kind of prices for crude oil was back. I think it was the beginning of the Russia-Ukraine war, right? So that's one reason why the price kind of slowed down or reversed. It's not reversed. I'm not convinced that we are facing the official reversal of the current trend yet. I do believe that we might be in for another correction, bullish correction. I don't know to what extent. I don't know how aggressively it will happen, but I do believe that we might have another pump before an actual reversal. And it's kind of similar to what happened back in 2022. You see, we had this aggressive spike to the upside. Let me zoom in a little bit here to see. An aggressive spike to the upside. We reached, I think it was all-time high, right around 126-ish dollars. Then we had some what seemed to be a reversal, kind of what's happening right now on the price, right? An initial bearish correction that looks like everything is behind us now, right? Yeah, but then we had another bullish correction, immediate bullish correction, and then again a resumption of the bullish trend for a couple of months back in 2022 before we actually had a reversal and correction to the downside, right? So that's why I do believe that we're not in the clear yet when it comes to crude oil. I do believe that we might have some strong support around the $83, which is just below where the price is trading today, right? Can it go lower? Probably. Let me plot here the 23.6 of the Fibonacci level. 72.5. I don't think we might reach 72.5. Probably, but highly unlikely. Personal opinion, that is, right? We might go to 72.5 tomorrow. We don't know. But what's technical support for now is the 83, 82-ish dollar as a support area on the chart. And then probably we might have another bullish correction to the upside before an actual reversal to the downside, right? So it's highly risky to trade crude oil because of volatility right now. And if we also plot the ATR here, let me put sorry, the internet is kind of slow today. Okay, the average true range of the daily is at $6.7. So that means that even with full swing, we might see a maximum of 6.7 drawdown in a single day. That's the extreme, let's say, if it goes down for $6.7 in a day from the area of open price, right? So from 86.5, if we go down to 6.7, we might go around 80-ish, which is slightly below the 82 that I already mentioned, right? So anything more than that is considered like an extreme move intraday, right? So taking that into consideration, in combination that Fibonacci also supports the 80-ish area, I don't think we might get anything lower than 80 in the short term. That's my personal opinion. So what I'm planning to do on the demo account is to wait for the price to slightly retrace around the 38.2 monthly Fibonacci, and then start considering opening some small long trades, and if it does reverse to the upside, start adding on the way up, right? What we see currently is that the orange lines here are the Bollinger Bands. Bollinger Bands show volatility. They are quite expanded, right? If you see here, let me remove. If you see here, the orange lines are quite close to each other. Volatility is not that interesting, and then boom, we have this big expansion on the Bollinger Bands. That shows that volatility is there to support any significant moves, right? The moving averages are still validating the bullish trend, and the stochastic is not indicating any overbought or oversold conditions in the market. It's in neutral levels, so that means that there is potential for the price to move to either direction. It does not mean that because we had this big aggressive bullish rally, we need to have a big aggressive bearish rally to continue trading crude oil, right? So that's my take on crude oil. I'm just waiting out for the price to retrace a bit lower, and then start building some long positions around the 80-ish dollar. Let's go through the comments real quick. Yesterday and gold. Yeah, we're gonna go through Dow Jones and gold. Norman from Zambia. Hello, Norman. Joyce, what's your advice on trading a sideways bias like happening on gold? We're gonna check what's happening on gold, Joyce. All right. So speaking of gold, Joyce and Mr. Gold is Money asked for gold. So let's go through what's happening on gold. All right. So yes, last week we had some sideways action on gold. There was this uncertainty in the market. Is the attack on Iran a single attack? Is it gonna escalate? Is this the start of a war? Is this just a change in regime that President Trump mentions so passionately? So that's why we had this sideways movement. Was not clear, still is not, right? We don't know what's gonna happen, obviously, but I do believe that if we see a correction on crude oil here, right, and the price starts pumping to the upside, especially if the Strait of Hormuz is not opened anytime soon, then if crude oil starts pumping, right, that's a sign that inflation will go up. If inflation goes up, that means that gold will get much support in that scenario, and therefore the price might retest the all-time high, if not make a new one, right? So when it comes to sideways movements, personally, what I like to do is I like to scale it down, right? Reduce my position sizing when opening any trade. One, because it's a trendless market, right? Okay, gold is not a trendless market in general, but currently looks like it's trading in a sideways formation, right? So if you scale it down, if you reduce your position size, that means that you avoid hitting a stop loss too quickly and too hard, right? And second of all, the lower position size keeps you in the game for longer until we actually get a trend back into the market, right? So currently for gold, personally, I've been positioned to around 5,000 and something, 5,080, something, somewhere like that. I was positioned there to buy, and I am currently in a very small profit right now because of the trendless market currently on gold. But I am still in the game. I opened a small position. I'm keeping it there. If it goes slightly down, I'm okay. If it goes slightly up, I'm still okay until we see a break of the two boundaries, which for the time being looks like it's around the 5,200 and 5,000. More or less the boundary of this trend. Currently, the price is testing the upper boundary of 5,200, which is also the 23.6% of the Fibonacci retracement level, right? So let's wait and see what happens with gold. Personally, I do believe that in the short to medium term, we might get a retest of the previous high, at least not the all-time, but previous high around the 5,400, which, by the way, is a trading idea that we gave, I think it was last week, with my colleague Stan. Actually gave that idea. Let me show you what I'm talking about. If you go on YouTube and search Exness, I'm gonna mention this later on, but once I mentioned the trading idea of last week, if you go on YouTube and search Exness, go to our channel and click playlists, you're gonna find the trade of the week, right? If you click the trade of the week, you're gonna get a list of videos in chronological order. And last week, this is Stan, my colleague Stan. Last week, he gave the trade of the week, gold momentum scenario. And the idea is for gold with a target at 5,600. Okay, Stan went all the way to the all-time high, 5,600, right? So this is a trading idea that if you watched last week, when was it? 3rd of March. 3rd of March, you were here. 3rd of March, you were here. If you watch the trading idea video of Exness on the day it got released, you will probably enter somewhere around here, right? Because we usually share in the second half of the day. So probably somewhere around here. Anyway, why am I mentioning this? Because you can have trading ideas if you follow our channels. We give out trading ideas every single week in a video format that you can watch on your own pace and on your own time. All right, so that's my opinion, Joyce, on trading sideways. Scale it down, reduce your position sizing, and wait for a trend to form. If you are small trades in trendless markets, keeps you in the game for longer. All right. What was the other instrument? Dow Jones. Yeah. I don't have it here. Let me open it. Okay. Dow Jones. That's an interesting setup. We have a big correction phase that's happening since almost a month. Yeah, 10th of March, a complete month today. And currently we are, looks like we are in a bullish correction phase. Currently, let me plot some Fibonacci levels. Yeah, currently we're past 23.6. We are approaching 38.2. I'm not too keen to open a long trade before the price crosses above the 38.2, but once it does, I think it will be an interesting setup to start building some long positions with targets the Fibonacci levels. So first target 48,600, second target 49,000, third target 49,700. So I believe it's an interesting setup. We have a strong bearish correction, so probably we're gonna get a good size correction phase to the upside, if not an extension of the previous bullish trend, right? But for the time being, I believe that the Dow Jones has a very interesting setup with pretty clear targets if you wanna trade this this index, right? I hope that answers your question. Yep. Okay. So we've seen gold, we've seen oil, we've seen Dow Jones. Let's check on what's happening with cryptos. Bitcoin is nothing too interesting, let's say, for me at least. I mean, there is no significant volatility. Nobody's talking crypto for now. Everybody is focused on crude oil and gold because of the uncertainty and geopolitical tensions that are happening in Middle East. So there is nothing interesting to say about crypto for this week, at least. For now, if we also check on fear and greed index, we see that there is a sentiment of extreme fear in the market. It's like 13%. I think it's the lowest. Oh no, that's 2019. We had 5 last week. Okay. All right. So sentiment is not there. Volatility is not there for sure. You also see the Bollinger Bands are quite contracted. I mean, compared to here, right? This is volatility is very dried up, right? It's very low. So if you don't have volatility and if you don't have sentiment, there is nothing really to support buying Bitcoin in the short term. If you are doing it as a long-term investment, probably it's a good area. It's a good area to buy. We are at a yearly low right now. Yes, so why not buy for the long term? Buy and hold, I mean actual Bitcoin, but as an instrument for trade, I don't think there is anything interesting happening with Bitcoin. Even if we plot the Fibonacci levels that I like to use on the last major swing, we are still fighting to go above 23.6. I mean, we have the current area of 71,000 retested once, twice, 3. This is the 4th time that is trying to cross above the 23.6. So if it does not cross, then I don't think there is anything interesting. If it crosses and actually remains above the 23.6, then yes, we might get some action or reasoning to buy Bitcoin. But for the time being, personally, it's a no-no for me. I'm just gonna be stuck on this trade forever until the price crosses above the 23.6, right? So there's no point of locking a percentage of your funds into an instrument that is not moving. All right, talking about instruments that are not moving, let's move on to Euro USD, which is actually performing rather well, right? We have the strong bearish trend that was happening since the beginning of the year seems to have found sufficient support on the lower band of the Bollinger Bands, right? This is just a practice trade that I took yesterday, very small, 0.01 lots, right? On the assumption or thought process that the lower band of the Bollinger Bands in combination with the oversold stochastic might give a good entry point, and for the time being it seems that it's working, right? So what are the targets if you haven't bought into Euro USD yet? Probably the first major resistance, and probably the area where I'm gonna close the current trade on the demo account. I stress again, this is not actual funds, this is a demo account, right? Might be 117. 117 because it's the combination of the 100-day moving average and the 38.2% of the daily Fibonacci retracement level, right? So if you haven't bought into Euro USD yet, I would personally wait for the price to actually cross above 117 before I open any long trades. Because if you open now, you only have a very small room for profit, given that we get a bearish correction around 117, right? But personally, I do believe that 117 or 117.7, which is the second target of the Fibonacci, which is the 50%, it also aligns perfectly with the 50-day simple moving average. So 117 to 117.7 is the strong dynamic resistance. Dynamic means the area between the two moving averages, right? Which also happen to perfectly align with the Fibonacci levels. So that's a very strong resistance area. Yeah, that goes on Euro USD. Don't forget, this week we also have some data coming from the States. We have inflation and core PCE index on Friday, I think. So yeah, if you're gonna trade anything related to the dollar, pay attention to the publication times and actual figures around those publication times. All right, now moving on, some interesting setup that I found was Euro Pound. Similar to Euro USD, we have a strong bearish correction phase with extreme oversold stochastic oscillator. The price is testing the support of the lower band of the Bollinger Bands, which Bollinger Bands are quite expanded. So what do we have on Euro Pound? We have extreme volatility. We have strong indications of oversold conditions. So why is this interesting? Because I want to keep an eye out and try to find some levels to open some long positions on Euro Pound. I think we don't have any significant, if you go to the calendar real quick here, nothing significant from UK or Euro. We have the GDP, okay, that's for January. So yeah, nothing too interesting on coming out of, in terms of data on European area or the UK. So it's a pretty clear chart for this week. So my take here will be to try and track the swing as it goes, as it progresses lower, if it does progress lower. If not, then probably I am gonna wait for the price to cross above 23.6, which is around the 86.7 pence, and start building some long positions to try and take some profits on the way up. If it goes up, we might have an extension of the bearish market. That's why I'm saying I'm waiting to see if I can find some entry points, good entry points to buy Euro Pound for this week. since we don't have big data affecting volatility, right? So similar move, pound dollar, again aggressive bearish rally since late January. Yes, price found sufficient support on the lower band of the Bollinger Bands. Currently it crossed above 23.6. So personally, I think this is a good chart to try and find your targets. Probably I might start building some long positions on pound dollar, and the targets are pretty obvious: 135.6 and an extension 136, which is also the medium term high here in mid-February. So quick recap to what we did so far, what we explained so far. Crude oil, long around 80 to 82 ish dollars, given that it does go that low. Gold, we have a trendless market. Size down your positions and you will be staying in the game for longer. Bitcoin, nothing too interesting until it makes a valid break above 23.6. Euro USD, probably too late to jump in just yet. But if you are scalping, you might find some interesting setups intraday to benefit from the area of the current level of 116.5 until 117, if you're into that. Euro pound, monitor and wait to find a good entry position. And if you do find a good entry position, the targets you might use Fibonacci retracement levels, as we mentioned. And pound USD seems like small sizing into long positions might be a good fit for this week. So yeah, that's what's on my radar. The other things that I have here is just researching. How about Aussie USD? Let's check on that. Okay. Aussie dollar. What do we have here is a failure of the price to break above the current level of 71,200, around there, for quite some time now. We have multiple retests here for the past couple of months. Same goes, methodology as with Bitcoin. If the price is retesting a specific area on the chart and fails to break, automatically that means that that's a strong support or resistance area on the price. Aussie dollar is, if you see here, 2-year is testing the 2-year high, right around 71.5 it reached. So it's quite possible that we might not get a valid break above if it does not continue retesting and possibly making valid breaks. Valid break means it breaks above the area and stays above the area, right? We might not see a valid break. This is a 2-year high. This is a very strong resistance on the price. So it's rather risky to trade the Aussie dollar when it is at a 2-year high and it has failed to break this level in the past month, right? I mean, reached that level and failed to break above, right? That's what I mean, failed to break. Now, if you want to wait it out and see if you can find some short positions on Aussie dollar, then which is highly risky to do so again when an instrument is in a multi-year high or low. Doesn't mean that there is any difference. Multi-year highs or lows are extremely risky to trade. So personally, I would stay away from Aussie dollar for the time being. For that reason, it's highly risky. It's not worth it. Just choose something else to trade if you have to trade. So yeah, that's my advice on not advice but personal opinion on Aussie dollar. It's too risky. It's not worth it. Just find something else. So yeah, thank you, Steve from Oman. So guys, please, if you have anything, any questions or any other instrument that you want to check, please let me know and we can go through. Joyce, silver, yeah. Okay, silver is an interesting setup. We have a strong correction phase before, after it reached. Is that the all-time high? Yes. So quite interesting setup. We have what looks like a completed correction phase, right? We have big aggressive bearish candlesticks, and currently the price is trying to retest at least the last high around 95. So in the short term, we might have a good trading opportunity buying into silver, because let me add some indicators here to get a clearer picture. Okay. Stochastic shows that we have a neutral sentiment in the market. There is no overbought or oversold levels, right? So that shows me that we have the room to move to either direction, right? First of all, so that out of the way, we have the Bollinger Bands that are rather constant, not expanded, not contracted. So that shows that we have sufficient volatility in the market for the price to continue in either direction. And the short-term trend shows a bullish trend in the market, with the price currently remaining above the short-term trend line. So personally, if I had to take a trade on silver, probably I would buy into silver with target around the 95, 96 area, which is the latest high here in early March, and is also the area of the upper band of the Bollinger Bands. So in the near short term, I mean extreme short term trade, personally, that's what I would do on silver. Swiss franc, Japanese yen. yeah, Swiss franc, Japanese yen, as it went, as it goes with Aussie dollar, again we have, is that all-time high? I haven't checked this pair in a long time. I think that's all-time high. Seems like it. Yes. So yeah, what's the question here? You don't trade an instrument that is an all-time high unless you want to short it. If you want to short it, you want to check if you can find some candlestick formation to support shorting it. Currently, I don't see any of that. Probably a triangle formation that is approaching its end for the time being, but that does not show anything. Stochastic is probably overbought. Let me plot that. Yep, it's in overbought conditions, so not very wise to buy into these forex pairs. This forex pair individually, so it's kind of risky to buy into this right now. There are no significant indications of a reversal either, so it is possible to see probably a kick above, but then immediate correction to the downside. So not a valid break, but it's more of a penetrative move, right? Above the 204 probably, just above the triangle, and then come back immediately. So too risky of a trade. Just let's try to find something else to trade instead of playing with fire on an instrument when it is at an all-time high. So yeah, that's my take on Swiss franc, Japanese yen. I hope I answered your question, Chino Gibson, right? Yeah, thank you for suggesting a pair to check. Okay, so guys, before we close this live brief, I would like to walk you through where you can find us. Obviously, I mentioned YouTube. If you go on YouTube and just type Exness, you will find our channel. You can subscribe and get notifications first when there will be new videos from us. Playlist, trade of the week, very, very helpful or insightful videos that you can use on a daily basis. We publish a video every single week, and we actually show you what our performance of the past ideas was, right? So for the last 50 ideas that we did, 50 weekly videos, that almost a year, we have this performance. We have 38 successful ideas, 12 not successful, 78% success. I think that's pretty good, right? That means if you've followed every idea of the last 50, 38 would be successful, 12 was not. I think that's pretty impressive. All right. So what else do we have? You can find us on X, obviously. You will find our official account where we also publish daily different charts that you can read about. It's a short read. It's just a Twitter post, X posts of charts daily that you can take into consideration. Also, I have my profile on X where I also publish every single week different instruments. It's mostly on crude oil and gold. You can just click on my analysis and it will take you to TradingView, where I publish ideas every single week. It's mostly crude oil and gold. I will be changing a little bit to have more instruments every week, but the majority is for now crude oil and gold. Yeah. So this is my profile on TradingView. This is the username if you want to search my my profile and check on my analysis. You can see here crude oil gold every single week. Right, I'm gonna add more instruments in the coming days, but gold and crude oil are my standard go-to instruments every single week. All right, so you can find us on Twitter, you can find us on YouTube to find meaningful content that can actually help you get a clearer image on what's happening in the markets. Right, you can also find us on Instagram. You can see our podcast that we do. Again, this is a weekly videos that we publish podcasts. We have trading talks and Born to Trade, two different types of videos. Trading talks discuss more of personal experiences and some different trading trading definitions and concepts that you might find interesting to see. So yeah, that's interesting, I think, for someone to quit doom scrolling and actually watch a video that can help their trading formulation of a strategy. All right, so I think we can wrap the presentation up. This was the weekly live stream. My name is Antreas Themistokleous. You can find Exness's accounts. Give us a like, subscribe to the channels, keep up with the videos, and you can also comment on those videos. What do you want to see next, right? If there is some specific topic that you want us to talk about that we don't have a video about it already, you can write a comment on any video and we will check it and probably create a new video about the topic that you want. You can ask for anything. You can ask for risk management. You can ask for anything. I can't think of specific stuff right now, but you get the idea. So yeah, thank you all for being here. Thank you for your questions. I didn't really was time. Yes, thank you very much. Think of that. Thank you, Joyce and Chino Gibson. Thank you very much for staying until the end. I hope I was not too tiring, and hopefully you found out some informational insights that you can use. Thank you for your questions and the instruments that you posted here on the chat. So see you all same time next week. My colleague Michael will be hosting next week's live brief. So yep, thank you all for being here and see you all next week.